Good morning, ladies and gentlemen. My name is Jared Farrell and I am a Senior Client Advisor with Global Reviews. And this morning I'm here to talk to you about the motor insurance industry in the UK, and I'm here to talk to you about our Digital Marketing Effectiveness Program. So to start off this morning, first of all, thank you very much for coming along. I'm going to tell you a little bit more about Global Reviews later on, but I want to start with asking a question. So recently we asked UK consumers who are actively looking for a new motor insurance policy, what is it that will get a provider onto your shortlist? So you're about to purchase a motor insurance policy in the UK. What is it that will get a provider onto your shortlist? And the consumers came back to us and told Global Reviews that the number one reason that will get a provider onto their shortlist is that they've heard of the brand before. Now, we thought that that was very interesting because when we started looking at our marketing effectiveness program results with regards to the motor insurance in the UK, we found that unprompted brand awareness across the different providers and aggregators within the industry was actually quite low. In comparison to other industries that we also do marketing effectiveness and digital marketing effectiveness programs with, we found that while Direct Line came in the highest at 52%, followed by Aviva and Churchill, these scores were quite low in comparison to other industries, and then also the number of brands that we recalled was very, very high. So what that has shown us from a starting point is that the industry itself is very fragmented, and so this low unprompted brand recall is showing us that a brand that they know or a brand that they've heard of before being the number one thing which will allow them to select a brand as a provider on their shortlist is not really being translated through from a marketing point of view because many consumers are not recalling many brands within this market. So it's a highly congested marketplace. When the question is then asked with regards to prompted brand awareness, we can see that these numbers jump significantly with Churchill coming up to 84%, followed by Aviva, Admiral and Direct Line. However, this shows us that there is latent brand awareness with regards to the different providers within the industry, but that they are not scoring as high with regards to top of mind. So if we look at this chart in front of us, and without going into too much detail with regards to the chart itself, I want to focus on these scores on the very right-hand side. As we took consumers through our research program, the end of our research program, we asked them to choose one brand. And what these scores show us on the very right-hand side is that the scores are very low. Across those brands that achieve the highest preference scores within our digital marketing program, our digital marketing effectiveness program, we can see that the preference scores are low. So this fragmentation that is happening within the market and the congested nature of the motor insurance market in the UK is carrying through right until the actual point of purchase. So what does that actually mean? So brands who are investing their digital marketing budget moving forward into 2015, what does that mean with regards to how you can win within the market? Some of the other figures that I can pull out to add further color to the story is that we can look at the individual brands themselves and the number of customers that they currently have within the market. So this again is from the Digital Marketing Effectiveness Program that we ran in November 2014. We can see that Direct Line have 5% who are current customers, Aviva have 11%, AA coming in at 7%, and Admiral also coming in at 7%. So if we have the market penetration of the current customers as per our Digital Marketing Effectiveness Program, and we then run that against, well, what was the actual final preference scores for people as they were going through our program, we can see whether the numbers are increasing or decreasing. So what we can see is that of those who are current customers and those who then go through our Digital Marketing Effectiveness Program, there is an increase of those who are from current customers up to final preference. So Direct Line are increasing the amount of people who say that they will choose them as a motor insurance provider in the UK. LV are also increasing, and so are Saga. Those who are not doing as well are Aviva and Admiral and AXA and more than. So basically what we're talking about here is we're talking about where should we be putting our digital budget, our digital marketing effectiveness. How do we achieve that? How do we leverage that? And how do we make sure that we're spending our money in the best place with regards to achieving consumers and growth? So what this is telling us here is that Direct Line and those who are increasing the number of people who would prefer them before the actual final purchase are doing well. However, when we go back and we look at this concept of brand recall and the number of people who unpromptly recall the brand, we can see that Direct Line are scoring 52%, Aviva are scoring 40%, Churchill are scoring 37%, Admiral 19% and LV 16%. So what is happening here is that we can say that Direct Line are probably spending more money than any of their competitors with regards to their marketing budget because they are achieving the highest share of voice at a level of unprompted brand recall. So is that maybe what's driving those who are current customers up to a higher final preference figure? And we also see that Aviva then, the same thing, are probably the second largest spenders in the market because they have the second highest share of voice when it comes to unprompted brand recall. The concept that I'm moving towards here with regards to the results that we're talking about are that we have a program, a digital marketing effectiveness program, which allows us to look at how consumers move through the pathway to purchase when they are considering choosing one provider over another. I'm going to talk more about the methodology with regards to how this works in a moment, but the fundamental element is if we look at it on the basis of the number of people who are currently customers of a company or a brand, and we look at the number of people who would then go on to prefer that company or brand if they were within a research program, we can see what way are the numbers actually moving. Are they moving up and are they moving down? So these numbers here in front of us with regards to Direct Line moving from 5% to 8% would indicate that Direct Line are doing well, and Direct Line from a marketing effectiveness point of view are achieving an increase on the number of consumers. So Direct Line in this particular instance should be happy. However, if we look at the percentage of recall that the brand has achieved and attribute that to the amount of marketing budget which has been spent, we can then see, well, what did Direct Line need to spend in order for them to achieve the increase? Where is the effectiveness occurring? And so we can see that if we look at a percentage difference from recall through to preference, the number of people who recalled unprompted at the beginning, through to the number who finally moved through the process of looking for a provider and then say, well, I'll choose this brand over that brand, Direct Line's return on investment is at minus 146 from a percentage index point of view. And so while Direct Line are increasing the number of customers, the amount of money that they are having to spend to increase those number of customers is significantly higher than in comparison to LV. So this is the Digital Marketing Effectiveness Program. And as I said, I am Gerard Farrell, a Senior Client Advisor with Global Reviews. I'm going to talk you through how we came to these numbers, and I'm going to talk you through how within specifically the motor insurance industry in the UK, we can help you look at how the digital marketing budget is being spent, how effective it is, and we can also help you with regards to planning where you should be spending your money in the future in order to drive the best return on marketing investment. A little bit about Global Reviews. We are a leading international data analytics and advisory organization. We have two main products, and the ones that I'm going to be talking about this morning is the Digital Marketing Effectiveness Program, but we also have a Digital Sales Effectiveness Program. The platforms that we conduct research on, we have multiple platforms. We look at mobile phones, we look at desktops and tablets, and so this particular study that we're talking about this morning is a desktop online study. A key element with regards to our methodology is that we use in-market real consumers. I'm going to talk a little bit more about that and our methodology. A key element with regards to what we do worldwide better than anybody else is that we help set best practice standards and benchmarks across organizations internationally. Annually, we are putting 50,000 consumers in the homes, putting 50,000 brands in the homes of 50,000 consumers in the UK each year, and across the world we work with more than 500 brands and organizations. With regards to how global reviews works and our overarching methodology and how we work with clients to drive greater efficiencies and effectiveness when it comes to applying marketing budget, we have developed an end-to-end proprietary funnel-based approach. What I'm going to be talking to you about this morning are the first three phases of the funnel approach, which is in front of you at the moment, which is the discover, the consider, and the act phase of that funnel. Specifically, I'm going to be talking about the discover and the consider phase, but this overall funnel approach is essentially based on the concept of pathway to purchase. As a consumer moves through at the very beginning learning about a brand and then moving more towards learning about the different types of product attributes or services that that brand can provide to me against competitors, and then going on to actually purchase from that brand, and then we have the post-purchase experience, whether they become an advocate, and then whether they come back around to renew their relationship with that brand or service the next time they come to make a purchase. What I'm talking about this morning is specifically the discover and the consider phase, which falls into our digital marketing effectiveness program. Discover is essentially how easily your customers can find you and how strong is your attraction to them. Moving into the consider phase, then, how effectively do you engage customers and help them match a product or service to their needs? I'm going to be going into more detail with regards to each of these different phases, and then the digital sales effectiveness program comes in between the consider and the act phase, as we now look at a consumer is at the doorstep of your website, and we are now looking through how your website performs with regards to converting the consumer closer to the point of purchase and making sure that they don't abandon their search and leave for another provider. But as I said this morning, we're talking about the Digital Marketing Effectiveness Program, which is the first two steps of this end-to-end funnel. To talk a little bit about the methodology and some of the scores that I showed you when I introduced this topic at the very, very beginning. Each year within a particular product category, we conduct interviews with 2,400 consumers, and they are in-market consumers, which means that they're consumers who are considering buying a brand or product within your category within the next 90 days. That is really important because if we took an omnibus approach to research and we sampled 1,000 people and we asked them, are you considering buying a particular product within the next 90 days, somewhere in and about 10% to 20% will be in market. So what we provide is those 10 to 20%. It's a very specific, very niche, activated customer base, and so we're removing the noise from the general market with regards to how people are thinking about your brand and how they move through that purchase cycle. The 2,400 in-market consumers are broken up on a monthly basis. We're interviewing 200 each month, which gives us a longitudinal tracker. It gives us data which is more applicable to a period in time, which is obviously very important from a marketing campaign point of view, and how the actual schedules are being used maybe from a media point of view as well. We take these 2,400 in-market customers, we bring them to an online survey where we interview them, and we ask them a number of questions about who can you think of at the moment within this particular market? Top of mind, unprompted brand awareness. We then ask them, okay, well, which one of these brands that you can think of would be your preferred brand at this time? And then what are the kind of things that you're looking for from a provider within this industry? We then ask them to complete a blank screen test where we provide a website with nothing more than a place where they can put in a URL that can take them wherever they would like to go, whether it be a search engine, whether it be to an aggregator, whether it be to a brand website, or whether it be to a third-party research site. We record everything that they do in the blank screen test, and after the blank screen test we take them back in where we ask them more questions with regards to how they got on for this during the particular blank screen test, and then we ask them to shortlist brands now on the basis of the task or education piece that they have just completed online. From the shortlist brands, we ask them why did they choose particular type of shortlist brands, and then we ask them to choose one brand out of their shortlist that they would consider purchasing at the final point of purchase on the pathway to purchase. And that's a key point, because what we're doing is we're bringing them as close as we possibly can to the actual purchase point, and everything that happens before then is replaying in as close as possible real world methodology, how people are researching the information that they're finding, and then how they're shortlisting and preferring different types of brands. There are two key components which are really important about this methodology. The first one is that the areas on screen which are currently highlighted in green are what are called claimed market research. The limitations of asking tells us that people can be poor predictors of their own behavior, and that they are also poor at recalling what they have looked at or what they have done in the past. So that's the first component. Our methodology is a mixed methodology. So we're doing claimed behavior, but what we're also doing with the blank screen test is that we're looking at passive measurement. We're recording what people are doing when they're actually going through the search process. And that's really important, because we are measuring the keywords, we're measuring the clicks, we're measuring how long they're dwelling on particular pages. And when we then overlay that against the different types of things that they're claiming that are driving them towards purchase, we're getting closer to this 360-degree methodology of being able to understand the process, where they're going, and then being able to use that to then ask them the questions, why did you go there? So it's statistically robust, it's timely, it's got longitudinal data within it, it's a niche market of in-market consumers, which is key, and then we're also bridging the gap between claimed behavior and actual consumer behavior as they're moving online. So as I mentioned earlier, this methodology takes us essentially from the beginning of the digital pathway as they begin to look for information online, all the way through to the doorstep of the website. And that is what the Digital Marketing Effectiveness Program covers from a methodology point of view. So for this particular study that I'm talking to you about this morning, this is a piece of research that we completed in November this year on the motor insurance industry in the UK. We spoke to 200 in-market consumers as part of the November pulse for this research. As I mentioned, we do 200 each month. We had a 50-50 split almost with regards to gender. We had a good breakdown with regards to how people are represented within the household. We have almost 1 in 3 are what we would call a family and have children up to the age of 16 in the household. We have just over 1 in 5 are single, and then we also have a good proportional breakdown with regards to those who are couple and then those who are empty nesters as well. Geographically, we have a good breakdown as well across the UK with regards to where people are living, and as I mentioned, this research is conducted in their homes and as close to real-life methodology as possible. We have found that the mean household income with regards to those who we were conducting this research with was 34,149 sterling, and that the mean age of those in the sample are 44. Now, we have the full breakdown with regards to the distribution of those ages as you would find in standard quantitative research, but for the purposes of pulling out just key insights, I'm looking at means. So, we looked at this acquisition and sales funnel before, and I moved through it very quickly. Now I'd like to come back to it and I'd like to explain it in more detail, because it's a fundamental part of the Digital Marketing Effectiveness Program, and essentially I suppose many marketing strategies and plans will be based on the concept of conversion, moving a consumer from one step to the next. And that is essentially what we're doing here from a market research point of view. We have brand recall at the beginning, which is unprompted brand recall, and we can attribute that to essentially the hypothesis of share of voice, and those that are top of mind and achieve the highest number of votes are most likely those who are spending the most amount of money from a broadcast advertising point of view. So in this example, we can see that Direct Line are coming in at 52% and Aviva are coming in at 40%. I have a full list of, I think it's 45 different brands within the study. I've just pulled out the top 5 here, and so we have a huge proportion because, as I mentioned already, it's a highly fragmented and highly congested marketplace. Between brand recall and visited, we ask people to go off and actually complete the blank screen study, and the visited score is the proportion of people who came and actually visited this brand's website. The shortlist then is the number of people who actually include the brand within their shortlist, and a shortlist typically having 3 to 4 brands within it, and is essentially the same concept as a repertoire of brands. And then finally we have the final preference, which is from my shortlist I am choosing one brand. So straight away, one of the interesting things that jumps out for me here is that we have Direct Line, who's at 52%, who are the highest spenders probably with regards to their offline marketing budget, achieving 52% of brand recall and achieving 8% of final preference. And we can see that 20% have visited the website. So in comparison to, say, someone like LV, who have 16% brand recall and all the way over to 9% final preference, we can say that LV are actually the ones who are winning here, because that the proportional difference or the percentage difference between recall and final preference for LV is minus 56%. What is very interesting as well with regards to LV's funnel here is that the proportion of people who visited their site is lower than the proportion of people who actually chose them as their final preference. So there's something going on there with regards to what is actually driving people to the LV website or to purchase or choose LV at the end if they are actually not visiting the website at all. And so this sales and acquisition funnel can tell us a lot of things with regards to how different brands are performing as they move through this pathway to purchase online. In front of us, what we have is essentially the journey that was taken by the total sample as they moved through this blank screen study. The first figure you can see there in the top left-hand corner is 87%, and that is the proportion of people who started off on a search engine. 10% started off on a comparison website and 3% started off on a brand website. Out of that, we can then see that from the 87%, 43% went on to actually go to a comparison website or an aggregator, while 30% went to a brand website. Now, typically, it would suggest that what's going on here is that SEO is driving a certain amount of this as it moves from search engine through to aggregator. But within this particular industry, there seems to be something very interesting going on, which is that I would question the amount to which the aggregator brand and a provider's brand are seen in some ways as the same thing. And I'm going to come back to that in a moment. That from a branding point of view, so many of the consumers are actually deciding to go to an aggregator and finish their search and purchase on an aggregator rather than going straight on then to a brand. That would be one reason. And the second reason is that when we looked at first preference before people completed the blank screen study, a huge proportion of people put in an aggregator brand as one of their first preference, even though we asked them for a provider. So within this marketplace, there's definitely something going on from the point of view that consumers are maybe attributing brand providers the same way as they attribute the aggregators and comparison sites, and certainly the amount of money that's been spent by the aggregators would put the aggregators up there in the same level with regards to top-of-mind recall and the messaging that's coming through from broadcast advertising. So looking at these journeys in front of us, it's very interesting to see how consumers are moving through the journey, and we can see this 87 moving to 43%, and then from that 43%, 14 are going on to the actual brand website from the aggregator website, whereas on the brand website we have 30% moving back up to the aggregator website with regards to focus search. So the aggregator website holds a huge amount of power with regards to how the consumer is moving through the actual journey and where they're actually making their final purchase. So for example, we have 7% of the 80% did search only and didn't move any further. We have 29% stopping at the aggregator site and not moving any further, while 9% going onto the brand website and then back to the aggregator. So the premise here is that the brands are leaking customers really with regards to where they're moving from the aggregator side. Other than that, we would say that 5% said that they would like to initiate a chat about price in an online chat and forum. And this was at the focus search stage, while 3% said that they would fill out a form and then with regards to getting a call back. So moving on, we can see then that a huge proportion are looking move through the aggregator website, and they're moving from search engine to aggregator or search engine to brand. But one of the components that we have within the digital marketing effectiveness program is that we have a search acquisition module. Because we capture every click, every keyword that a person enters when they're going through this blank screen study, we can essentially capture the keywords that they're using when they're moving through the industry, and then we can cut and analyze those keywords in lots of different ways. So in front of you at the moment, we can see the keywords by industries that were used by the whole entire sample of 200. We can cut this by organic and paid, and one of the first things that jumps out is while car insurance is one of the highest with regards to the keywords that were put in, and certainly from an organic point of view, compare the market comes in as the second highest. After that, then we have direct line. So this idea that what is driving the actual consumer from a branding point of view, compare the market are up there and are certainly top of mind before the person actually goes anywhere when they're looking in the search engine. So these are the words that they're putting into the search engine, and then the results are coming out afterwards. So this is before that they've actually been driven anywhere by the results. So compare the market from a branding point of view, achieving higher than any of the brand providers within the market. If we look then at the next stage with regards to, okay, the domains then, we know what keywords people were putting in and we can look at that on an organic and a paid basis. But let's look at it on the basis of the destination rather than the keyword itself. Where did people actually end up? And so we can see that the top three are essentially aggregators. We've got Money Supermarket, Compare the Market, and we've got GoCompare.com. And so what is it? What are the keywords that brought people to these different places, and how are the keywords different between the aggregator and the actual brand themselves? And so for Money Supermarket, I pulled out some examples here. We can see that car insurance is what's working for them, and then obviously the Money Supermarket, the highest proportion then coming in on the paid for individual brand level. When we look at the direct line, we can see for direct line it is all pretty much brand specific, while the aggregators themselves are doing a better job at competing for the wider terms, and then the actual brands themselves are competing on an individual basis for their own brand. The costs with regards to the paid versus the organic are higher for the brand than they are for the aggregator, and so there's an interesting thing going on there with regards to optimization and how people are spending their budget with regards to organic and paid. One of the key elements that I'm trying to demonstrate here with regards to the digital marketing effectiveness program is that we have access not only to your own keyword searches that are being used by consumers as they're actually in market and looking for your product, we have the keyword searches that are being used by competitors. And we can break that down on multiple levels from a segmentation point of view because we looked at demographics earlier on. And so that demonstration of who this particular sample is also means I'm trying to show you that we can also look at female only, we can also look at particular age groups, we can also look at particular types of household incomes. So the search engine acquisition module is a huge part of understanding the journeys and the reasons why people are moving from search engine to aggregator or search engine to brand. But as they come back after completing the blank screen study, we also ask them a number of questions over why they actually went to the destination that they went to. So in this particular case, we can see the proportion that use different types of aggregators, and this falls in line actually with the keyword searches that were put in from the domains that were visited. So why did they use these aggregators? The top two reasons why they stated that they used the aggregators is that they thought that it would be the easiest way to compare different options and that they wanted to see a range of policies by different companies. And this is very interesting from the point of view that aggregators, for many, would be the idea that it offers potentially certainly a view across the market, but also maybe the best rate. But what seems to be coming out of this a lot of the time is if we remember that we have a fragmented market and we have a highly congested amount of brands within the market. And so people were calling various different brands, the final preference scores are low, and now they're telling us that the reason why they're going to the aggregators is basically they're looking for things which are going to help them make their decision. So for the consumers themselves, it's almost as if there are too many options and they need cues, or they're looking for cues which are going to help them with regards to actually making that final decision. So this post-purchase dissonance or this cognitive dissonance of making sure that the too many choices and making sure that the choice that they make is a right one. If we come back to at the very beginning of this, I talked about the fact that the number one reason that they said that a brand would make it onto their shortlist was that they'd heard of the brand before. There's a lot of evidence to suggest here that the brand that is the most distinctive, the brand that achieves the highest differentiation, is enough to get the consumer to consider the brand, and then after that it's up to the brand to make sure that they're communicating the right things and offering the right product offering. So I'm suggesting that within this particular marketplace, what's going on from an advertising and a marketing point of view is very, very interesting, because the lines between the aggregator and the actual brand themselves are being blurred. From a consumer point of view, they're almost saying that they have too much choice and that they're looking for help with regards to being able to make a decision over the different brands or products or services that are available to them. Now, it is noted that this is a highly commoditized market and a very aggressive market as well. So, shortlisting. We are now at the point they've completed the research. Who are the companies that you would shortlist at the end? And so the ones that were coming out were Churchill, Aviva and Direct Line, followed by LV. And we looked at these already because we had this in the funnel chart. But a key thing which comes out of the results when we look at those brands that were shortlisted, 47 brands were shortlisted within all of the brands that could be shortlisted. Again, this is showing us that there's a huge amount of fragmentation within this marketplace. The reasons for the shortlist, again, I'm familiar with their names. Good prices and offers. Not surprising that it comes in being very, very important, but I've used them before also, something which is very, very important, followed by I trust these companies. So some level of a relationship with the brand is very, very important. If we consider the idea that, before I move on to that slide, if we consider the idea that a repertoire or shortlisting of brands will typically include 3 to 4 different types of brands. So the idea is that I am Direct Line, I am in the shortlist. Who are the other brands who are also shortlisted beside me in the consumer's mind? And I am Direct Line. I don't actually make it to the final preference. One of the other 2 brands has actually made it to the final preference. Why did that brand make it to the final preference? Why wasn't I actually in the final preference? We can start looking at that with regards to the various different reasons which are driving consumers to choose one brand over another, and taking in things like the search acquisition module, and then also looking at the actual journeys that consumers took and where they moved to on that journey. We can start building a case from a targeting point of view of how we can stop the abandonment or the lost opportunity that occurs when a consumer shortlists you but doesn't actually go further with regards to the final preference. And this is what we call the lost opportunity score, and we can pull out the lost opportunity score for each individual brand within this particular product market. So, for example, here we can see the kind of things that are driving people not to choose Direct Line, or the reasons why they might choose Churchill more than they would choose something else. So it's a key component within actually understanding the journey and why people are dropping off one brand rather than another. So there are a group of people who didn't shortlist at all, and the main reason why they didn't shortlist is that they just select the company with the best price and rate. So we can establish those who claim to have some level of or like to have some level of a brand relationship, and we can also identify those who say, I am just here completely on the basis of the product attributes and the cost, best price, and that's where the comparison comes in. So typically these guys who are here on the best price and rates would typically be the people who would mostly move towards the aggregator, but the data is suggesting to us that the aggregator is drawing people at a brand level, and so those who would typically, they may buy at the brand level or on the brand website at the end, but the touch points that the aggregator is creating within the consumer journey is certainly making the journey more complicated in some ways for the consumer, and really they are looking for cues which is going to help them with regards to feeling better about that final decision that they make. So we looked at this side of the journey already. We've now talked about shortlisting. The question we ask is, okay, when you're shortlisting a brand, what kind of places would you go to get information? We can see that 80% claim that they're going to the aggregator to get information in regards to shortlisting one brand over another, and then 55% are saying that they're getting the information from the actual brand website themselves. 20% saying recommendation from friends, 25% saying that they'll pick up the phone. When looking for pricing information, 52% are saying that they're then going and getting pricing information from the comparison site, whereas 32% are saying they're getting it from the brand website. And then finally we look at the purchase. Where do they want to make the final purchase? 42% are saying that they want to make the final purchase on the brand website, 34% are saying that they want to make it on the comparison site. So there's a really interesting thing that's going on here. The aggregator is providing a lot of the information up front, and the final purchase is actually happening on the brand website. And so when we look at it, with regards to the reasons why they're going to the comparison site for the final purchase or the brand website for the final purchase, we can see that the comparison website, they're doing it on the basis of speed. They believe that they will finish the journey faster, whereas those who are going to the brand website are doing it because they believe that they will get the best price. And so the question I would raise is, can the brands not introduce a price comparison across the market level themselves? And what does it take if we start to introduce the concept of the brands starting to act more like the aggregators, as the aggregators are already starting to act like the brand? In the consumer's mind, the lines are already blurred and it is grey. And so if we can match the journey and we can understand what consumers are looking for, can we start offering the other things that consumers are looking for and start taking back control of the touch points rather than just consumers using the brands as the final stage of that touch point from making a purchase point of view? Looking then at the very end with regards to the final preference, we looked at these scores already and we can see that LV coming in at top place, but the key point is that these scores are very, very low, and 45 brands shared amongst the final preference is a huge amount of brands. When it comes to the reasons why they chose this provider, we've looked at this again. We said that they've used them before. And then I trust this company moves further up the scale, which is really important because it was further down earlier. So these things which are helping them with regards to the supporting factors from a brand attributes or brand values point of view, I trust the company. I've used them before. The top 2 scores and the fees and charges actually coming in 3rd place. One of the things that we looked at first preference before they actually completed the blank screen test, when they haven't educated themselves with an online journey. We then look at second preference. Okay, now you've completed it, you've shortlisted, and you've done final preference. And we can look at the distance between first preference and second preference, and we can see how much people are moving. So in this case, we can clearly see that LV are doing very well. We can look at the reasons why they chose first preference. And so I've used them before, I'm a current customer, or I trust this company. And then we can compare them against, well, what did they actually say when they chose them a final preference, and how have things moved? What is the effect of the journey as they move through these research on finding out about the different types of product attributes, and what is it that's driving the actual final preference? So we can see in this particular instance that the 3rd place changes to they have good fees and charges, and 2nd place changes to I trust this company. So, coming towards the end, I just want to talk specifically about searching. We have lots of various different components within the Digital Marketing Effectiveness Program. One of them is that we can look at the duration of time that they spent searching. So that's over how long a period of time, weeks, hours. And in this particular case, we can see that the mean amount of time spent was 4.2 hours. We can look at how they actually want to go about searching for information. In this case, we can see that 64% are saying that they go straight to quotes and then look at each policy. They're using the quotation section as a filter, essentially, and then looking at the actual policy details and what's applicable for them first afterwards. Again, suggests that cognitive dissonance and the ability to be able to make a choice give me fewer options, and I feel like that I'll be able to manage the amount of information in front of me. Finally, then we look at if a company is looking at how to use their resources, whether people are going to want to talk to people on the phone, call into a branch, all of that different types of stuff, we can see that 66% are saying that they would use the site to find the right policy and get a quote and purchase through the site. And then one of the things that we looked at earlier on was that the final purchase, 46% that they said that they were purchasing from the brand, and a lower proportion said that they were purchasing on the aggregator website. And so what we've done here is we've run the differences between the demographics of those two different groups to see what is it that makes them different. So those who are saying that they would purchase on the aggregator are more likely to be male than female. We can see that there is a slight age difference between those who are saying that they're going to buy in the brand in comparison to those who are going to buy in the aggregator. There's also a difference with regards to a mean salary, and so while we may have this idea that the aggregator may be the one that, you know, consumers are going there because they think that they might get the best price, it actually is the reasons why they're buying on the aggregator website is because they want to do the job quickly. And then we can look at a breakdown with regards to who they are from a household point of view. So, a couple of key conclusions. Cognitive dissonance. The idea that there are too many choices in the market. What is the role of branding and advertising? Consumers are saying that they'll buy on the basis of those that they've heard of before, but yet when we look at the amount of brands that are being recalled, the amount of brands that are being shortlisted, and the amount of brands that are being preferred, there are a huge amount of choices out there for consumers to choose from, and brands maybe need to look at how do they achieve greater salience, affinity, and cut-through with the consumers. It seems that those brands that achieve the greatest cut-through are the brands that will ultimately win. In the consumer's mind, what is the difference between the aggregator and the brand website? The data would suggest that the lines are a little bit grayer, and that when they are putting in a search, or when they're suggesting ones that they would buy from at the very, very beginning, they're putting in both aggregators and providers. So this concept with regards to controlling the touch points and what the brands are going to do, or how they decide to approach the fact that at the moment that the aggregator is controlling a huge proportion of the actual journey and the touch points, is massively important with regards to the marketing strategy. And then marketing effectiveness in terms of offline and online is essentially the proportional spend that brands are spending, where the search engine optimization is then kicking in with regards to the keywords across industry and domain, and how that is affecting the shortlisting and the final preference scores. My name is Jared Farr. I'm a Senior Client Advisor with Global Reviews. My contact details are on the screen. I've talked a little bit about what Global Reviews provides to our clients all across the world. I just talk about three things as I finish up. We believe that we do three things exceptionally well. We provide unique insights to inform digital strategy. We provide data and intelligence that leads to optimal online sales effectiveness. And we provide expert advice and consultation. We do this across multiple industries, including banking, finance, insurance, energy, superannuation, travel, retail, telecommunications. Please do get in touch if you have any questions. Thank you very, very much for coming along this morning. I hope that you've enjoyed it and that what you learned this morning was informative. Thank you very much again.